Welcome back to Kryptolytix, giving you a fresh take on crypto analytics. Today, going to give a quick market update and show you what I'm seeing in the markets. So let's get straight into it. Okay, so just going to start off with the parabolic SAR, which I was talking about in the last market update, that when we flipped to short here, I would start scaling into short positions. So the way I did that was the parabolic SAR flipped to short. And so I set my sell orders at 26,300 roughly, which was the 200 period smooth moving average, and also 27,350, which is the 100 period smooth moving average. Both of those got filled. So I'm currently sitting in a short position, short swing position, where I'll be taking a majority of the profit of this around here, I would say. So there's a Fibonacci here as well. And, you know, there's a chance that we could even keep going lower as well, down to like 21K, but I'll be scaling out of my position as this goes down because it's quite a large position. That one's sitting in drift. And yeah, as you can see, it's, I guess, doing it well at the moment, but that's kind of the rough target, I suppose, for closing a good chunk of the position and leaving a little bit on the table with the PSAR for that to sort of just keep coming down. That's the line there. As this comes down, then that's kind of the point at which this will flip in the opposite direction. But just thought I would start off with that since I did cover this in the last video. And that one is a short. Again, settings for the PSAR, adjusted this one to 0.0005, 1, and 3. So again, you can find a link to this script in the description below. There's a bot version of this and the standard version of this. I like the bot version of this because it's also got like a DMI modifier and all of the trade automation stuff kind of built in for wonder trading. So again, you can find that linked in the description below. Having a quick look at open interest, this is aggregated across all exchanges and all coins. So as you can see here, with this big dump, big flush out of open interest, which tells me that a lot of the long positions have been cleared out of the market, which is generally a good sign for reversal. So this is in the short term, at least a reversal signal. It's very typical that when we get big flushes in open interest, that it is a reversal signal of some sort. Looking at the funding rate, it looks like mostly we have shorts in play. So again, from a contrarian perspective, that is looking like it's a potential reversal signal as well. Again, we're just building a case here, right? And the last, probably arguably the most important in terms of a short-term reversal, is the liquidations. So global, so that's all coins, all exchanges. We had $94 million wiped out. And as you can see, generally speaking, that does tend to lead to short-term bounces. Generally speaking, not always, but generally speaking. Here, we had this. Here we had this, and here, where are we going? We potentially just come back to this order block here at 26K, something like this. So that's the case for a short-term bounce here. With these three things all lining up from a contrarian perspective, showing us that a lot of the liquidity has been sort of flushed out. We can get some confluence on that as well because we have this open interest profile support block, which I've been waiting for it to test since the top. So I started drawing this all the way back here. So that's where it started basically on the 15th of April when price was all the way up at 31,000. That's when I started drawing this. Excuse the messiness of the chart above. So this was a major open interest support block. We've just tagged it. So that's another point of case for the short-term bounce back up, where to we don't quite know, and there's a chance it will keep falling through the floor. So personally, for a short-term long, if you want confirmation, I like to use the stochastic heat map. There's a moving average on the stochastic heat map which you can kind of use to enter trades. So for example, when you see we're incredibly oversold, see this dark blue candle, that's generally a sign that we're very oversold. We actually don't have a dark blue candle right now, so that means we do still have potential, at least from this indicator's perspective, to go even further a little bit. When you come back above this moving average and close a few candles above, this can often be a good point to open a short-term long position. And then on the flip side, if we come down below it again, then you can look to exit that position if you're looking at a very short-term scalp. So again, here above it, we didn't really close many candles above, so you closed a few here, so long position here, and you could probably go into, say, the open interest profile block. The first point was here, this tiny little point here, and that was right there. So if we do the same thing, I guess the top of the block here is sitting in around 25K. It's not a very big long position, let's be honest, but the altcoins might run more. So if we do start to track sideways here for a kind of lengthened period of time and kind of close a few candles above the moving average down here on the stochastic heat map, then that might be a good opportunity for a short-term scalp if you're waiting for confirmation. If you're like me, I've already opened up a short-term long position and it was opened up here. You can see here, this long here. So at around 24,873, this was automated. I was asleep. So this automatically opened up. It's not really much in profit right now, but I guess you get the idea, and the point is that this is a flush of open interest. That's what this means, because that's this is a bot that I wrote that automatically trades for me using open interest. But yeah. Things are all looking a bit shaky, right? And let's have a look at some of the fundamentals as to why that is. So let's quickly go over and have a look at what happened in the FOMC meeting. So they met yesterday, at least with regards to US time. They decided to keep the target range for the federal funds rate unchanged at 4.75% to 5%. And this is the first time since December 2022 that the Fed has not raised rates. The decision was made in light of recent economic data, which showed that inflation had moderated from its peak in March. However, the Fed's dot plot, which shows the median forecasts of FOMC members for the target range for federal funds rate, suggests that the Fed may raise rates by 25 basis points 2 more times in 2023. If you look at the dot plot, it shows that 11 of the 19 FOMC members expect the target range to be 5% to 5.25% by the end of 2023. This would mean the Fed would need to raise rates by 25 basis points in the next 2 meetings, in July and September. While listening to Jerome Powell's speech, we actually heard him say skip. So he said, we've decided to skip, and then he retraced on that and used different language. It seems like everyone really hangs on to every single word he says during the meeting. It's a little bit crazy. These are the key factors that the Fed considers when making their decisions about interest rate hikes. It's the pace of economic growth, level of inflation, strength of the labor market, and the risks of a recession. And just remember that the Fed will be paying attention to the markets, and if the stock market starts to fall sharply, or there is a significant increase in bond yields, the Fed may be more likely to delay or even reverse its plans to raise rates. So I guess we have to look at the stock market then, right? Well, the stock market right now is in extreme greed. It's sitting at 81, which is really, really frothy. Really frothy in the stock market. It's not an all-time high for the year, but it's certainly very high. If we have a look at the Nasdaq, we can see it's on an absolute tear, but we're right into this order block right here. So this is going to be a really key level where a lot of big traders will be actually starting to open up shorts here. I would say big time. So we've got greed at 81. We've come right into this order block right here. So there is a chance that we actually reverse here, and the probabilities are relatively high. So we'll definitely have to see if this plays out. And if this starts to tank from here and it's just a small correction, like a ABC corrective pattern, because I feel like we'll probably get a correction here anyway. If we get something like this, an ABC Elliott wave corrective pattern here, and then we continue up, then that's bullish, and that's a sign of trend continuation. On the flip side though, if we get a 5-wave pattern, like something like this, then obviously that's incredibly bearish and trend continuation, at least bearish trend continuation. Something interesting with regards to this though, there is a thesis that the Bitcoin and crypto market, I would say the price of Bitcoin precedes the stock market, right? Because Bitcoin started shooting up before the stock market did, and it started coming down before the stock market did, and the stock market just seemed to follow Bitcoin. It's a really interesting concept, right? Well, let's have a look at see what kind of corrective pattern we're looking like on Bitcoin. So from what I can see this is not an ABC. This is a 1, 2, 3, 4, 5, which means, at least from this corrective pattern perspective, that we might be continuing the overall bear trend, which, as you can see, that's definitely a bear trend there. So we'll have to see how this plays out. But if the thesis that Bitcoin leads the stock market and this is a 5-wave corrective pattern, then at least from this perspective, that could mean that the stock market would do the same thing. So we'll definitely have to keep an eye on that one and see how it plays out. And if you want to trade the stock market, at least the indices or commodities, then you could always check out Pionex BT. So you can actually use Bitcoin. If you don't want to sell your Bitcoin, but you want to trade against it, you can use a Bitcoin margined account and you can trade all of this stuff, which is really cool, using crypto. You can also use, USDT, USDC, stuff like that as well. But you've got gold, silver, S&P 500, the Nasdaq's in here as well. There it is there. The FTSE, the Nikkei, it's all there. So pretty cool. Very, very cool. So, if you can see that, the crypto market is lagging and not really doing anything, but the stock market's on a tear, well, this is a potential place where you can get exposure to the stock market. You've even got foreign exchange and stuff like that as well. Copper on here as well. So It's definitely a cool exchange, something worth checking out. Thought I might address a couple more fundamental narratives. There's a narrative with regards to the US election where there's a typical stock market pump, right, leading in. But we do have thin liquidity because there's a lot of cash sitting on the sidelines right now. So how can the stock market pump in a thin liquidity environment? Well, they've cut off the rails to crypto. And so I think that's really helped because if you see what's happening with the SEC and how they're going after altcoins and just crypto in general, really cutting off all the rails, the on and off ramps, the banks and all that sort of stuff, then this is one way they can do that, because if big money can't get into crypto, then where are they going to put their money? Well, maybe bonds and stuff as well. But at least with regards to traditional markets, this is one way that they can do that. Another narrative that I would like to address, and that's with regards to UK being the saving grace for the crypto market, because Rishi Sunak, the Prime Minister, is quite bullish on crypto. If you listen to his sentiment on it, it's actually quite positive. You've got Andreessen Horowitz, A16Z, opening up an office in the UK. Now, the thought there is, well, okay, that's really cool that, they're opening up an office there. Means that, hey, we might start to get some liquidity back into the crypto market. Well, if we compare the stock markets, at least by market cap in terms of the indices, check out the US market versus the rest of the world. The UK market is almost a tenth only of the size of the US market. So, I mean, sure, some money will come in, I'm sure of it, but the US money would need to follow, right? Because have a look at this, $33 trillion. China, 6.9. And again, it's only really Hong Kong that's really open for crypto. This is mostly the actual Chinese stock market. Japanese Nikkei, they're still actually pretty big. But the FTSE is actually only 3.9 trillion. It's a very small market comparatively. So I don't think that's our saving grace, to be frank. It's positive. It's definitely a positive sign. I'll give it some credit. But in terms of this narrative, I just thought I'd quickly address that. This is not going to save us because this is the kind of money that was flowing in. This kind of exposure to the markets is being cut off. And we only get a small percentage of this anyway compared to the stock market. So if we only get a small percentage of this into crypto, then that's just even less. Another thing that I saw that was interesting, and this was a few days ago, is that there is a rumor that Gary Gensler opened up a $2.5 million short position on Bitcoin. He probably should have done it to Solana, Cardano, and just about everything else that he actually labeled as securities, to be honest, because he would have made a lot more money than this. But anyway, the implications of this would be quite dire for him if he is found to be guilty, because it's market manipulation. But according to a source named Capo WSB Coinbase, one of the largest cryptocurrency exchanges, is rumored to have evidence that Gary Gensler placed substantial short positions on Bitcoin amounting to $2.5 million about 48 hours prior to the first market dump. So this is pretty damning if this is actually true. So I guess we'll have to see if this is chased up and investigated, because this is this would be an incredible overreach and indicting of his already tarnished reputation. So I thought that was very, very interesting. We'll have to see what happens there with regards to this. If anything even comes of it, we're not really sure, but it's definitely something worth watching. Covering the Bitcoin chart, again, we can see that the stochastic on the daily is sitting down the bottom there. And we are at a key diagonal level, which is drawn from here to here. And then we can see we're sitting right on that level right now. So at least in the short term, I feel like there is a good chance we do get a small bounce here. When we look at altcoins on the week, you can see they've been pretty much decimated, basically double digits in the 20s for a lot of them, absolutely getting killed. You can see the total 3, which is all crypto minus Ethereum and minus Bitcoin. And I've also removed USDT and USDC from this, has actually put in fresh new lows compared to December. So that's pretty aggressive, very aggressive selling. And you can see most of that new low was a result of the SEC filings against Coinbase and Binance. It's pulled back a little bit though, so we could be looking at maybe a double bottom here, but I think that's not very likely. But we'll see. We actually don't know. But you can definitely see that there's a very aggressive selling pressure on altcoins. They just aren't doing very well right now. Bitcoin and Ethereum are kind of dominating at the moment because they are the least likely to be attacked by the SEC. Well, I guess everything can be attacked by the SEC. They're really going after everyone at the moment. I think that kind of covers it. Didn't want to go on too much of a rant regarding this. Just wanted to cover a few key things. As per the last video that I showed, if you think that we could potentially bounce here, but you want to buy Bitcoin at 25k, well, you can earn 161% if you feel that that's the case. So if you want to buy Bitcoin at $25,000 right now, in the next day you could earn 0.52% while you wait for that to fill, which is crazy. So if you want to know what this is all about, you can check out my previous video. I'll leave it on the screen here, so just check out the top there and you can see what this is all about. This is using dual investment. The video is about the buy the dip or covered gain strategy, but right now you can see the kind of APR that you can earn if you do want to buy Bitcoin at 25K. It's pretty insane. Wow, that's absolutely insane. 246% APY. So if you do like this level and you do want to buy Bitcoin at 25K, you could earn this interest on this as well. This is using Pionex structured products, and I'll leave a link to these guys in the description below if you want to check this out. And just before I go, I just wanted to have a quick look at the daily agri-trade chart. This green line here is the cumulative volume delta. We can see that we're in just aggressive sell mode. So we're actually lower. There's more selling pressure right now than there was during the banking collapse, which is very crazy. So big money, big spot positions are just taking as much profit off the table as they can. We are, however, at the middle of the SMA VWAP bands, which is often a decent reversal point. So here we had it as a top, here we had it as a support. It kind of just ran straight through and just kind of kept going nuts here until we got those red candles on the stochastic heat map, which was the top call that I made in a few videos ago. And here we are, come to the middle of the range now. Do we bounce here? It's the ultimate question, right? We've got an order block. We've got the middle of the SMA VWAP bands. Yeah, there's a potential that this is, at least if you're bullish, then there's a decent case for a reversal here. Bottom of the bands is at around 17K. But that just tracks up with time anyway. This is going to be coming up every day. So we'll just have to see how that plays out. In terms of the stochastic heat map, we've got a bit of blue here. We're starting to print some dark blue as well. But we've still got yellow and orange up the top. So, I mean, there's still more room to the downside, that's for sure, if you look at the stochastic heat map and you just trade the colors, mostly red to mostly blue. So we'll have to see how this plays out. I think that's enough information for one video. Longer term, I've built my short. Short term, I've got a few long positions on some altcoins. So we'll have to see how that plays out. Long position was based on the funding rate, liquidations, and open interest. Probably can't set targets too high for this though, but I feel like we will get potentially a small bounce here. As you can see, I'm long on Phantom, LPT, Tron, Arweave, the Graph, and Sushi. So we'll have to see how that goes. I'll definitely be cutting the positions though if we get just continuation, which is a possibility that we do, but I'm happily sitting in shorts as well anyway. So either way, we'll have to see how things go. So hope you found this video helpful. If you did, feel free to give the video a like and subscribe if you want more content like this, and hit that notification bell, and let me know in the comments what your sentiment is on the market and where you feel we're going to go to. So this is Kryptolytix signing out. Hope to see you on the next one. Have a good one.